Hey there, this is David Cox, Senior Portfolio Manager at Financially in Sync at Raymond James in Waterloo, Ontario, Canada. Today on the webinar, Where Do We Investors Stand? It is Friday, May the 8th, 2026. Let's get started. As usual, we will sort by week here and look at the intermarket stuff. Silver up at the top of the list. We're going to talk more about silver and gold a bunch, actually. There's the NASDAQ. Generally speaking, a risk on week. You can see down at the bottom, crude oil selling off almost 10% here on, again, just recurring headlines going on in Iran and around the world. Just a reminder to pause your video player at any time to dig in for more details. Stocks peaked out 25 plus years ago. What, you say? Stocks have been rallying hard. Yes, indeed, they have. But this is, again, I want to remind you, this is stocks. This is the S&P 500 divided by gold. And again, some of you may wonder, hey, maybe this isn't total return. Well, I'll tell you, the total return chart, which is not shown, is the exact same shape. And the bottom line is that relative to gold, 25 plus years ago, stocks actually peaked out. You can see here, this is the S&P 500 being worth about 1.6 ounces of gold. Again, a couple of years ago, 5, 6 years ago, it was worth 2.6 ounces, and back in the late 90s, 5.5 ounces. So again, we got to always understand context when we're investors. And again, the reason I want to do that is because here's the chart of gold versus stocks. Now, this is a compressed timeline. This is the last 15 years. But on the right side of your chart here, this has been gold outperforming stocks over the course of the last couple of years. And this to me looks like a pullback in an uptrend, which means from a relative standpoint, we have an opportunity for gold versus stocks. Now, it hasn't turned back upwards yet. Again, this is where we start to use the nuance and look into the details of what's going on here. But the bottom line is gold, which has had a tremendous rally over the last several years. We've talked about it a lot over the last several years. Has just gone through a pretty big sell-off. We've just had the largest 40-day, so that's, we'll call it 8 weeks, largest sell-off since 2022. So that's been the last 4 years. So again, when we stand at the back of the room, right, when we look at this chart up in the top right here, if you just stare at this part, it looks like an uptrend. And the reason it looks like an uptrend is because it is an uptrend. And so from that perspective, big sell-off, we've got outperformance versus gold. Let's think about this as we go and shift our portfolios around. Now, this on the left side, this is the central fund, actually the old central fund. It's the Sprott Physical and Gold Silver. It's ticker CEF, trades dual listed on both the US and the Canadian exchanges. You can see our green and red circles. We've looked at these before. The only thing different since I last showed this to you is that we just bought back again a couple of days ago, adding gold and silver to portfolios into the all-in sync portfolio. And because I like the consolidation that's taken place here. From a daily perspective here, yes, I agree. It's not a uptrend yet. At the same time, the weekly trend here has actually done a fair bit of, what I consider to be constructive backing and filling, and backing and filling meaning consolidation since the peak that took place at late January. Now, again, I want to take another look at this. This is the returns of all the assets, the big assets anyway, since the Israel and the U.S. attacked Iran. You can see here crude oil up 41%. Look at those energy stocks right in the middle here, zero. The energy stocks have actually been dead flat. And again, if you would have asked the average crowd what would have happened since that kind of news and uncertainty and more war started, it wouldn't have been crude oil crude oil was going to surge, sure, everyone would have bet on that. But look at Bitcoin technology stocks, yields have risen, right? So bonds have fallen, gold has fallen 10% and so forth. So again, the markets are able to adapt and again, continually move around. You can see there's the Toronto market is actually down over this time frame, whereas the S&P 500 is back to outperforming. Let's just look at a couple of main stocks here from the all-in sync pool. These are three charts from three different sectors. On the left side, that is Southern Copper. These are weekly charts going back a year and a half. Caterpillar in the middle has just been an absolute beast in this market, and Lam Research is one of the many semiconductors that have been very, very strong. Let's take a look at airlines here for a moment. I haven't talked about airlines in a while. On the left side, this is Southwest Airlines, and Southwest Airlines broke out in the fall of 25. What I'm saying is, it broke above prior highs, had a big surge there, and then essentially is pulled back to that line. At this point, that looks like an interesting entry point as it relates to, from airline stock perspective. This is a very tough sector. This is not an easy sector to invest in, but again, the charts and certainly the interpretation of demand and supply will help that. And perhaps you'll say, oh yeah, but that's only benefiting because there was a bankruptcy and Spirit Airlines. Some of you may have even had canceled tickets recently on Spirit. Was delisted in 2025, and it's obviously, I just showed the chart there, over the last 6, 7 years was in decline. But the point is, Southwest Airlines is in a daily uptrend, and that is a pretty significant looking pullback. But I think it's an opportunity from a risk reward standpoint that looks rather interesting. Let's look at three stocks that got away. I mean, this is what happens as an investor. I certainly pay attention to the markets very closely, and so there are stocks that have come out of a fantastic bases that have captured the attention and the dollars, and certainly have been rocket ships in this case. And this is Intel, Micron, and SanDisk. my goodness, the rallies on some of these stocks here in the last while is just incredible. The reason there's a green circle on SanDisk is because I was presenting in Toronto, and during that time period there at the end of March, and referred to this is probably an entry point. But again, these are volatile stocks. But look at that. Look at that entry point just from there. I mean, 700 to 1400. That is a double in the context of a month and change. And that is just incredible. Again, we all need to manage risk. We all need to seek the kind of opportunities we do in portfolios. But again, some of them are inevitably going to get away. We'll finish off with sector watch here. There's the technology gold stocks up at the top, bouncing a little bit with gold. You can see still short term, intermediate term down, but that is in the context of long term trend upwards. So everything in between there, energy down on the bottom, selling off as crude oil came down this week. And just to help you understand what we're doing, this is the on sync results here from our pool to the end of April. You can see year to date, 6 month, and so forth returns there. And if you would like more information, please do not hesitate to ask. Lastly, where will I be? Well, next week I'm actually presenting a presentation called Trend Following Works for a joint CMT Association ProShares webinar. You are welcome to join. There is a registration link that I provided. I will also be in Boston late next week for the CMT Spring Summit. If you're going to be in Boston, please definitely track me down, and I'd love to chat with you. Please follow me on X. I'm at David Cox RJ, and thanks again for your time this week. This has been David Cox, Portfolio Manager at Financially in Sync in Waterloo, Canada.